Yes. So we have come to chapter 6, leases. Okay. Leases, there are like four things to learn. First thing is you have to know, IFRS 16, in the sense that when does a lease apply, when does not a lease apply, what are the yeses and nos and ifs and buts with related to whether you have to account it as a lease or not. Okay. That's all about topic number one. Number two is lessee accounting. Okay, a person who hires or who rents it is called the lessee. What would be the accounting in his books? Then there is a transaction called sale and lease back. I sell something, I will lease it back. So what would be the accounting entries for it? And also at finally lessor accounting. So how we have structured the classes. I'm audible, right? If there is any problem technically, please let me know. Can we use the chats? Okay, perfect. So today we will be talking about ifs and buts and yeses and nos with respect to IFRS 16 and also lessee accounting. Okay. See, the whole problem with leases is it took me a little bit of time to understand and so that I can reciprocate to all of you. The thing is, few things are not very clear if you read. So let's first do the prologue. Let's first understand, what is, and then we will go read. Because if you start reading now, you will not make anything of it. Okay. So we'll just do the introduction and then we will go. Right. So before we delve into all these things, let's do something. Okay. Yeah. So basically, what is a lease? You tell me, what is a lease? You can unmute yourself and speak as well. Okay. What is a lease? I don't want the textbook definition and all. I just want to understand, what it means in a very market sense of things. An asset which you take for rent. Absolutely. Right. So if you take something on rent, then that is on lease. Correct. So, what would you take on rent? It might be a building. You can take a machinery. You can take a land on rent. Absolutely, there are 99 years lease for this. So, any kind of asset we can take on rent. Correct. Now, the fundamental thing, the first part of the whole topic is how do you determine if a right to use is equal to a lease. Hmm? Because sometimes what happens is there is a little bit of doubt because mostly a service, I doing a service to you and a lease would sometimes be very similar. For example, let's say that I you are checking into Marriott. Okay, you are leasing the particular building or you're leasing the room for few days. Would it be a lease or would it be a service from the part of the hotelier? Right. So, first thing to identify is what makes a particular transaction, a rental transaction, a lease. Okay. So, once we identify that, then only we will start the accounting process for lease. So, the first discussion is all about whether it is a lease or whether it is a service. Did you understand the first question? Like, the problem is the service would, I mean, the kind of rental arrangement would sometimes be in the form of a service. It might be a service fees instead of a lease. So when would anything be categorized as a lease? That is what we are finding out. Is it clear? So let's understand what is a lease. Okay, fantastic. So what makes a rental a lease? Okay, that is the $1 million question. So for a rental to be classified as a lease under IFRS 16, okay, first thing that we have to do is whether the asset is identifiable. The first thing that you have to really see is, first condition is the asset identifiable? Okay. What and first thing is the asset identifiable, and second is is the customer having control of the asset? These are the two fundamental questions you should ask to see whether a rental agreement or would make it a lease or as it a service. If the asset is identifiable, if the answer to both the question is yes, then it is a lease. Otherwise, it would be a service. Okay. Now, what do you mean by identifiable? What makes an asset identifiable? So, see, if I am leasing an asset to you, obviously we will account it as ROU, right? So, it should be very much identifiable. That asset should be identifiable. Hmm? So, what the standard says is to make sure it is identifiable, you have to follow two conditions. Okay, what are the two conditions? First condition is the the supplier does not have substantive substitution right. Okay, and if he has, then no economic benefit should arise from. Okay, so what does it mean? So supplier should not have any substantive substitution rights. Now, who is a supplier in this category? Now, when I talk of a rental transaction, who's the supplier? Who's a supplier? Who's a supplier in a rental transaction? Who's the supplier? Supplier is not the lessee. Supplier is the lessor, right? I mean, Burj Al Salam is supplying the building to Sun Management. Correct. Here, Sun Management is the lessee, and Burj Al Salam is a lessor. So, supplier is predominantly the lessor, right? Getting it? Okay. So, what does it mean this lessor or the supplier does not have substantive substitution rights and no economic benefit should arise from substitution? Let's take an example to understand what this means. Okay. So, let's say that there is a company, okay, your company, SUN Limited, is having a contract with ABC Limited. Okay, this ABC Limited, let's say, is a carrier. Okay, there are few employees of SUN who are staying in Sharjah. So what SUN is doing is they are taking the help of ABC in carrying these employees from Dubai to Sharjah, and in the morning from Sharjah to Dubai and Dubai to Sharjah back. So let's say there is a contract. Okay, now this contract for carriage is signed for 10 years. Okay, next 10 years this would be there. There is one designated vehicle. Okay, a coaster, or let's say a bus, which is designated for this purpose, and this bus is there in SUN's premises every time. The driver and the bus would be there in SUN's premises every time. Okay, so whenever the employees are leaving, then it will go, they will go, and so this is a transaction. Now, first, prima facie, is this a lease? Is SUN leasing the bus from ABC? Is this a lease? Is this a lease? Now, don't go by the standard. I'm just asking you a simple question. I am, is there an asset? Yes, there is an asset. Correct. I am taking it on contract for 10 years. So is this a lease? Yes, it could be a lease. Correct. So what the first point says is that, see, if there is a designated bus, we know that this, then that asset that I am leasing is identifiable. Okay. It is very identifiable. It is that bus. So what I will account as an ROU would be the value of that bus. Getting it? So the asset should be identifiable. Now let's say the contract between SUN and ABC is that whenever they need, vehicles will come. Okay, so someday it is going to be a bus, okay, with AC. Another day it is going to be a non-AC bus. Or sometimes it's going to be a coaster. Sometimes, like, it's Saturday and employees are not there, then it is going to be a coaster. So if ABC is giving such assets, transportation is guaranteed, but the assets would be chosen by ABC. In such a scenario, do you think, ABC, who's a supplier here? ABC is a supplier, ABC is a lesser. Do you think ABC has the substitution rights? Getting it? So if ABC can choose which asset to do at what time, then it is not a lease of an asset. It would be a service provided by ABC. So whatever billing that ABC would do would be a service cost, transportation service. Okay, they are not leasing one asset. They are not leasing one identifiable other asset. Rather, they are just kind of like, they are just giving transportation service. So one day it would be one thing. So for a lease, the supplier should not have substantive substitution rights. Then only the asset is identifiable. Are you understanding what it means? What the standard means? It's a little tough. Okay, the wordings. It took me a little while to understand, but do you understand from the example what it means? Yes or no? Okay, fantastic. Now, second one is, if there is a substantial substitution, right, then no economic benefit should arise from substitution. Okay. Now, what does it mean is that, let's say that ABC has that designated bus. What happened is, suddenly this bus had a repair, or, or it has no, the normal maintenance. Okay. So in such a scenario, this bus was replaced and another bus was done given for just 2 days. Is that, if I do that, if it is for repair or breakdown, or like, for normal maintenance, I substitute the normal bus and give something else, then I would have to do that, right? Normally, in a plausible situation, I would mean to do that. Now, would that mean I would have substitution rights? Yes, you're substituting the asset, but the thing is that you are not getting any economic benefit from such substitution, right? So if your another bus is coming just for 2 days, right, you're not effectively getting any economic benefit. ABC is not deriving any economic benefit from substitution, but rather, if I am substituting one thing or the other, like, one day it is bus, one day it is AC non-AC bus, one day it is AC bus, one day it is coaster, don't I have the option to optimize? Right? If someone else is asking for an AC bus, I can one day, like, give you non-AC bus and give the AC bus to a high paying vendor. So that means I'm optimizing my options. ABC is optimizing my options and getting an economic benefit, right? So if they are doing such a thing, then it means that you are getting economic benefits from the substitution. See, substitution may happen because of repair and maintenance, but if it is not giving any economic benefits, any additional economic benefits to ABC, then it is fine. It's not that the other bus is gone for some other bigger paying client. The other bus is gone on maintenance. So I am giving you a coaster. So the substitution is not giving me any economic benefits. Are you getting point number two? Yes or no? It's a little tricky, but I'm sure you will understand. Okay, so that is what is meant for an asset. First, for to identify if it is a lease, the asset should be identifiable, and for identifying the asset, the supplier should not have substantive substitution rights. Okay, and all then only it would be identifiable, obviously. And also, if he is substituting, then there is no economic benefit that should arise from the substitution. It's only for meeting a need or meeting a dire need, and no economic benefit should arise. If these two are fulfilled, then the asset is identified. So we satisfy condition number one. Okay, now let's go to condition number two. What does it mean? Is the customer having the control of the asset? Okay, not just that you have to have an identifiable asset that is given to him, but he should have control of the asset also. Okay. Now, there is one more thing here. In case of identifiable, there is another explanation as well. Okay, sorry, I missed that. See, and asset should be capable of being analyzed independently. Okay, what does it mean? Capable of being analyzed independently. It means that, let's say that that service should be for use. Let's say that in the similar thing, like this is one example. I'll just mark this as one example. Okay. Now let's say that in another example, SUN is hiring a truck to carry its goods, and that truck is hired by ABC. Truck is going from let's say Abu Dhabi to Fujairah. Okay, it's a truck. I'm hiring a truck. Effectively, if you see, if I get on a taxi, it's called I'm hiring the taxi, right? That's why it's called hire, for hire. So I am hiring a truck, and my goods are being sent from Abu Dhabi to Fujairah, let's say. Now, what this truck guy does is, let's say my goods are like, what is happening is, let's say in the truck, my goods comprise of SUN's goods comprise 80%, and there is some more space. Okay, so what ABC does is, ABC will take other people's goods for 20%. Now, if such a thing is there, okay, if I am optimizing, the ABC is optimized, he's not replacing the asset, it's the same truck. Okay, he is not replacing at all. He is not getting any economic benefit from substitution. It's the same truck. But 80% of the goods are only mine, 20% is from somebody else. In such a situation, is the asset identifiable? These situations could arise, right? Did you understand the example? Okay, I hired a truck, to carry my goods for 10 years. And same truck. But what the company says is, like, it only 80%, 20% is going vacant. So what I do, I'll add few more things. I mean, I'll contact more companies and fill that 20% gap also. In such a situation, is the asset identifiable? Okay, how is it identifiable? I'm just taking only 80% of my goods. What is the logic funda behind it? So what the standard says is, in such a condition, like, if, like, asset is not substituted, but it is its capacity is used for something else. The standard says, if you are consuming 90% of the capacity, then it is an independent and distinct asset. Okay, they are not saying that fully you should be doing, substantially. That means if you're taking 90% of the capacity is being used by you, then it's still identifiable asset. Okay, if it is 80%, then it is not an identifiable asset, and this would not be a lease, it would be a service. But if it's 90%, 90% is just a sum given by accountant, but the standard says substantially you are doing it. And substantially, everywhere in exams, everywhere, only 90% is considered, 80% is not. Now, don't come to argue with me that by 80% is also substantial. Okay. So the accountants are given a number that 90%. Even auditors would say that 90% is substantial. not 80%. Okay, getting it? Asset is identifiable or not? Are you getting it? Yes or no? Okay. So what are the conditions? First thing is he should not have any substantive substitution rights. No economic benefit should arise from substitution and be capable of being analyzed independently. So what does meant by that? It should be a distinct asset and 90% of the capacity or 100% of the capacity, as the case may be, will be for you. Okay, after the asset is identifiable, we have to see if the customer is having a control of the asset. Okay, so there are two conditions for seeking control. Number one is the customer should have substantially all of the economic benefits from the usage of the asset. Okay, the customer should have substantially all of the economic benefits. So the economic benefits from the usage of the asset should be for the customer, not for the other person. Okay, obviously, so I'll give you an example. And the second condition is the customer has the right to direct the use of the identifier. Okay, so there are two conditions. Okay, to see if the customer is having control. The first condition is customer should have substantially all of the economic benefit associated with the usage of the asset. So from the asset, so let's say that SUN is hiring the us office space from Burj Al Salam. The benefits associated with the usage of that, the economic benefits should all go to SUN. Okay, I understand that the other person is getting rent, but apart from rent, there is no other, economic benefits that would be there for them, the usage of the asset. Okay, now I have a question. Okay, let's take an interesting question. This is not my example. This is an example which is in IFRS itself. Okay, now let's say that there is a company, ABC. Okay, so what ABC did is they constructed a windmill. Okay, now and from by constructing windmill, they generate electricity, and they also made a shopping mall, and a part of the shopping mall was leased to XYZ Limited. Okay, ABC, what they did first, there was a big electricity problem in the area, so first they constructed a windmill, and then they constructed a shopping mall, and that shopping mall derives its electricity from that windmill. Okay, this shopping mall is leased to XYZ. Okay, now because uh you know because they are using clean energy, what they are doing is, ABC is getting a tax benefit out of from government because they are using a renewable energy. So there is a tax benefit given to the shopping mall because to ABC Co, because they are getting energy from renewable sources. Now, can you say that substantially all of the economic benefits from the usage of the asset, which is the asset which is leased here, it is a shopping mall, correct? Now, from leasing of the shopping mall, is it going to ABC or XYZ Limited? I'll repeat the example one more time. ABC constructed a windmill and they also had a shopping mall. and shopping mall was deriving all its electricity from the windmill. This shopping mall was leased to XYZ Limited. Okay. Now, because they were using renewable energy sources to get all their electricity, the government is giving a tax benefit to the owner, ABC. Okay. Now, with this, all this situation in hand, can you say all the economic benefits associated from the usage of the asset is derived by XYZ? Or would you say that this is not a lease now? Yes. Did you understand the example? Yes or no? No, see, this shopping mall is not, is leased to XYZ. But the problem is, see, should have substantially all of the economic benefits from the usage of the asset should be to the lessee and not to the lessor. Then only we can say that lessee is having the control of the asset. But here a tax benefit is going to ABC. Would it deter or hamper the fact that this is not a lease now and XYZ does not have control of the asset? Okay. Okay, okay. So what the standard says is this is a very vexing situation. Okay, what the standard says is you have to see that customer should substantially all of the economic benefits from the usage of the asset. Emphasis on the word usage of the asset. Now you tell me, is this tax benefit because of the usage of the shopping mall? No, it is a tax benefit arising out of the ownership of the tax shopping mall. Because it is owned by ABC, they are getting a tax benefit. Okay. So they are only asking whether the usage from you, it is leased to you. If you use it, who's getting the economic benefits? That is what we have to see. Just a top of economic benefit just because of an ownership basis would not deter the whole situation. Okay. Now let's say that uh, you know I have leased the thing to you, but 50% of thing is still owned by me. Then that means that it is substantially all of the benefit from the usage of the asset is not gone to XYZ. Okay, if ABC says you take a shop, but 50% I would decide what to do. Okay, I will set up my shop there. Then that means usage of the asset is being done by ABC also, right? Here this tax benefit is not because of usage, but it is because of ownership, and that need not be considered. The standard specifically states substantially all of the benefits from the usage of the asset is still XYZ only, not ABC. Getting it? Yes or no? Okay, perfect. So you have to see whether the usage of this is how one area where the examiners will trick you. Okay, right. Now the customer has the right to direct the use of the asset. Now, what does it mean? So that means that, like, how I use it is my prerogative, man. Okay. So let's say that, okay, how I use it is my prerogative. For example, what they mean to say is, now let's say that, I decide, okay, the lessee decides how to use it. So let's say I leased a shop. Maybe I can sleep there. I can, like, sit and read things there. I can take a class there. I can run an audit firm there. I can kind of set my bed and make it use as a residential unit there. I can do whatever I want. Okay. That is when you would say that the lessee has the right to direct the use of the asset. Okay. Now sometimes what happens is it would be predetermined. The use would be, what does it mean is that, let's say that if you look at Burj Al Salam, they will say it is commercial space. You can't just get your bed and sleep here. It's predetermined as a commercial space. The legal regulations are like a commercial space. Or vice versa, there would be communities where you can't set up your shop. It's for residents only. So the use is predetermined. In such a scenario also, it would not even if the use is predetermined, it would not say that the customer does not have the direct use. He would buy that or he would lease that, keeping in mind this legal regulation, right? So once he kind of gets into it, he can decide where the kitchen should be, where the bathroom should be, where I keep my sofa, where I keep my things, where I keep my kitchen. It's all my prerogative. But just because the use is predetermined as to whether it is a residential or commercial, does not take away the fact that the usage is usage, and the right to direct the use is still with the lessor. Okay. It has to be very. This is one example where people would say, I mean, you have already predetermined it to be used as a commercial property. No, that is fine. I would have leased it because of because being aware of this predetermination only. Okay, I would have known that this is a residential, but once I get a residential, I understand I have to stay there. But I decide where the kitchen is, where the thing is, where I keep my bed, where I keep my sofa, where I go, do whatever. It is where I keep my pet. It is all my prerogative. You cannot come and decide what to do. Okay, so that would mean that I am having a right to direct the use of the identified asset. Okay, are you getting these things? It's a little high level complex things. Took me so much of while to understand, but this is what it is. So what makes any rental a lease? First thing, the asset should be identifiable. Now, when is an asset identifiable? When the supplier does not have substantive substitution rights. Okay, he does not have substitution rights. So now, if even if he substitutes, no economic benefit should arise from the substitution, and also the asset should be capable of being analyzed independently. That means almost substantially 90% of its capacity is used by me. Okay, then also it is identifiable. Also, the customer should have the control of the asset. How would you determine control here? We determine control in IFRS 15. In IFRS 16, if I lease an asset, I would have control if all the substantially all of the economic benefits from the usage of the asset is to me, and also I have the right to decide the use of the identified asset. I determine how to use it. Okay, I understand it's going to be a commercial property, but I decide, like, where the meeting room should be, where the server room should be, where Sahil has to sit, where Ashik has to sit. I determine. Okay, whether this should be a bullpen, whether it should be a pantry, whether this should be a cabin, whether it should be a meeting room. That's perfectly my prerogative. If anybody from the management is coming and dictating that no, you can't have a meeting room here, then that means I don't have the right to direct the use of the identified asset. Okay, you should have an identified asset, and you should also have a control of the asset. Are you getting these points? Is it clear? Yes. Okay, so this would be very much tested, and these are not very easy to understand. If you read the text, you would need some context, and now if you read, you will understand. So we will slowly start reading, and we'll do few problems so that it all comes to mind. Okay, so this is fine. See, identifying a lease. A contract or a part of contract that conveys right to use an asset for a period of time in exchange for a consideration. That's a standard definition of a lease. And what is an underlying asset? An asset that is object of a lease. Okay, that and all, let it go. But now let's read these paras. Okay, an entity must identify the contract contains a lease, which is the case if the contract conveys the right to control the use of an identified asset for a period of time in exchange for a consideration. The right to control the use of an identified asset depends on the lessee having the right to obtain substantially all of the economic benefits from the use of the identified asset, and the right to direct the use of the identified asset. The right to direct the use of the identified asset will arise when either the customer has the right to direct how and for what purpose the asset is being used, during the whole term of usage. Okay, I decide. Or relevant decisions about the use of the asset are predetermined. That means whether residential or commercial. And the customer can operate the asset without the supplier having the right to change those operating instructions. Or the customer design the asset in a way that predetermines how and for what purpose the asset will be used throughout the period. For example, piece of factory equipment designed to the specifications of customer. Even if the asset is specified, a customer does not have the right to use direct the use of an identified asset if the supplier has substantive right to substitute the asset throughout the period of use. Some contracts may contain elements that are not leases, such as service contracts. These must be separated out from the lease and account for separately. It is a wild ride. Okay, understanding this by reading this is very hard, but this is what it means. Now it should be a little clear for you. Okay, so I want you guys to go and read this. Okay, then only the example will stick in your mind. Obviously there would be a recording, but it will make more time to come back and see the recording. So get this registered in your head right now. It's not very easy. Now they have given a flow chart also. Is the asset an identified asset? Just like how we kind of did. Okay, is the asset identifiable asset? And then how it contains a lease or it does not contain a lease is very perfectly given as a flowchart. Also, you can take a look at this. And this flowchart is not BPPs. This is actually from IFRS 16. Okay. Now let's do one question. Now I want you to do this. Okay. Yes. So Coketown Council has entered into a 5-year contract with Carefleet Co. under which Carefleet Co supplies the council with 10 vehicles for the purpose of community transport. Okay. Carefleet Co. owns the relevant vehicles. Okay. 1 second. What is this about? Coketown Council has entered into a 5-year contract with Carefleet, under which Carefleet supplies the council with 10 vehicles. So who's the lessor? Who's the lessee? Who's the lessor? Who's the lessee? Carefleet is the lessor, correct. Carefleet is giving, and what is the underlying asset? It is vehicles. And 10 vehicles are the underlying asset for the purpose of community transport. Carefleet Co. owns the relevant vehicles. Okay, so the relevant vehicles are owned by the lessor, and all 10 of which are specified in the contract. Coketown Council determines the routes. Okay, Coketown determines the routes taken for and the charges and eligibility for discounts. Okay, so they are doing a bus service by hiring few buses. So Coketown decides the route and the charges and eligibility for discounts and everything. The council can choose to use the vehicles for purposes other than the community transport also. So lessee can use it for any purposes as he wants. When the vehicles are not being used, they are kept at the council's offices and cannot be retrieved by Carefleet unless Coketown defaults on payment. Very good. So, and if a vehicle needs to be serviced or repaired, Carefleet is obliged to provide a temporary replacement vehicle of the same type. Now you tell me, let's put the condition, and the question is it a lease? So what is the first condition? The asset should be identifiable. Now how can we identify an asset? When it does not have any substitution rights. The lessor, the supplier does not have any substitution rights. Now if you see, uh, when the vehicles are not being used, they are kept at the council's offices and cannot be retrieved by Carefleet unless Coketown defaults on payment. So Carefleet cannot access those vehicles at all. Okay, it's kept in their offices. So there is no question of substitution. Those assets are there only. I am not, taking, okay. But in case of service or repair, I will give up temporary replacement. Again, this replacement is fine, but it does not give any economic benefits to Carefleet at all. It cannot optimize the use of those assets. So can I say that, and the assets are identifiable and it is not used for any other purpose, just for Coketowns. So all the three conditions regarding identifiable assets are satisfied. No substitution rights, no economic benefits associated with the temporary substitution, and also asset is fully, the capacity of the asset is fully used by Coketown. It's not shared with anybody else. So can I say that, it is an identifiable asset? Yes or no? Yes. Now, let's go to whether the person has control. Now, what are the two conditions for control? Substantial, the economic benefits of from the usage of the asset should go to Coketown. Okay. So, Cooktown determines the routes and charges and eligibility. Uh, yeah, so there is no economic benefits from the usage that is going to Carefleet, because if let's say that Carefleet is deciding the eligibility for discount, then we can say that he is getting some economic benefits. But everything regarding the route planning, the the charges, the discounts, all are taken care of, or all are decided by Cooktown and not Carefleet. So substantially, all economic benefit from the usage is going to Cooktown. Okay, Carefleet does not even get a discount for this. And what is the second one? I direct the use of the asset. Right now, this is not predetermined. Okay, the council can choose to use vehicles for purposes other than community transport. I can use it for anything, and I decide the charges, eligibility, and discount. So that means I direct the use. Correct. So in such a case, is this a lease? Is it satisfies all the conditions, two conditions, and the extended ones on the two conditions? Is it a lease or not? Is this a lease or not? Getting it? This is how you have to identify whether it is a lease or not. Now let's see. This is a lease. There is an identifiable asset, 10 vehicles specified in the contract. The council has a right to use the vehicles for the period of the contract. The Carefree does not have the right to substitute any vehicles unless they are being serviced or repaired. Therefore, Coketown Council would need to recognize the right of use asset and a lease liability in the statement of financial. Now let's come to the accounting later, but it is a lease. Now the second one, can you guys do independently? If somebody can unmute and talk to me as to how you will analyze whether it is a lease or not. Yes. Yes. Can you do example two? Broke down. Nice name. Suits my bank balance a lot. So I'll read the question. Broketown Council has recently made substantial cuts to its community transport service. Okay. It will now provide such services only in case of great need, assessed on a case by case basis. It has entered into a two-year contract with Fleet Car for the use of one of its mini bus for its purposes. Okay. The mini bus must seat 10 people, but Fleet Car can choose any of its 10-seater mini buses when required. Mini buses are held on Fleet Carco's premises and are only made available to Broketown on request. Now tell me, is this a lease or a service? I am having a 2-year contract, right, with Fleet Car. So it's a long term. So whether it is a service or a lease. Yes, just now.
Sir,
Yeah, how do you construct? How should you think? There are two conditions for a lease. One is whether it's an identifiable asset. Second is whether you have control. Now let's look at identifiable asset. You tell me whether it's an identifiable asset or not. What are the conditions for identifiable asset? Anybody can chip in, huh? Yeah. Yes.
hello.
Yes. Who's this?
Uh, Sorry.
Sai, tell me.
Sir, it won't be a lease because one is
No, no, let's not go to the conclusion. You tell me whether it is an identifiable asset. There are two conditions. One
uh
is identifiable asset, second is control.
yeah.
First,
In
tell
the
me
in the
identifiable asset. How did you conclude it is not?
in the case of the asset is identifiable. Uh, in this case, the supplier, which is Fleet Car, they have substantive substitution rights because they can use it when required. They can use it and seat minibuses when required.
Perfect.
And
That's it. That
uh,
condition itself is lost. And of course, I would have an economic benefit if I replace, correct? AC, non-AC. I
yeah.
decide which 10-seater minibuses to require. So it is not an identifiable asset. What about control?
And regarding control, uh, should I, yeah. the fleet, the in this case, a customer which is broke down, they don't have all the economic benefits from the usage uh, because in other times fleet car is also using it, and they also don't have the right to direct the control of the asset because the vehicles are in the supplier's premises and they only get it when it's the person being used.
Perfect. It is only made available when on request. That means it's a service. Okay. So this is not a lease. There is no identifiable asset. Fleet car can exchange one minibus for another. Therefore, broke down council should account for rental payments as an expense in P&L, not as a lease. Okay. It's a service and not a lease. Getting it? Okay. That's wonderful, Sai. That's too good. Now let's see one more, I guess, is there. Yeah. Can you do this one? Oh, its answer is already there. Cabal enters into a 10-year contract with a utilities company for a right to use three specified physical. This you can do at home, but I think you understood the gist. Okay, let's move on. Okay, so there are two conditions which makes a lease and which are not. Now, there are from recognition exemptions. So, what does it mean by exemption? So, what happens is sometimes it is a short term lease. See, every lease, even if I get into a car, I get into a taxi to go from World Trade Center to, Alkises, is a lease only. I'm hiring the car. It's an identifiable asset. I have the right to use the asset. I have the right to control where to go. Everything is there with me. So it specifically is a lease. But what they are saying is, if it is a short term lease, okay, leases with the lease term of 12 months or less, you can choose, okay, not to account it as a lease, not to account it as per IFRS 16 and just expense it off. Okay. So this is called recognition examples. Not all leases have to be recorded in the format given by IFRS 16. If it is a short-term lease, what is short-term lease? If the leases are less than 12 months, you can go ahead and just expense it off. Okay, just like me hiring a taxi. Now, also some low value assets also you can kind of write off. You don't need to kind of show it as a lease. Now, what do you mean by low value asset? This is not provided. See, short term lease, the definitions provides that lease for 12 months or less. Okay, but low value is not provided, but there is a reason why the value is not provided, because it is perfectly subjective. It's a principle based standard, it's not a rule based standard. So what a low value asset for Reliance or Tata would, it may be low value asset for them, but for somebody like Sajram or Sun, a low value asset what is low value for them would not be a low value asset for me. So what is low value asset is purely your subjective interpretation, and it will depend from person to person. A laptop, for example, one laptop, for example, it won't be a substantial, will be a very low value asset for Reliance. But one laptop would be a very substantial, not a low value asset for somebody like Sajra. Okay, so see, IFRS 16 does not give an amount to be considered low value. It give examples that, the thing is, it's up to you. Are you getting some exemptions? So if the leases which takes care of the conditions of the lease, that is identifiable asset and control, still if it is a short term lease and leases of low value assets need not be recognized as per IFRS 16. Getting the point? 1.5. Shall we move on? There is nothing much here. Like low value assets and short term leases, you can write off. No need to kind of okay. Now let's do lessee accounting. So I don't think this is the major thing. Okay, this is what takes time. Lessee accounting and all, I'm sure you guys are already experts in that. So there is no need to kind of spend more time there. So you tell me, how should I account? How should the lessee account? The lessee should have if I'm entering into a lease, if the lease satisfies all these condition, I should have a right of use asset. We call it ROU asset. and also a lease liability. So this is how you have to record every lease, except for those exemptions. Every lease should be recorded like this. There is no concept of an operating lease or a financing lease for a lessee. That would only be for the lessor accounting. For lessee, every lease, no matter what, should be recorded as an ROU asset and a lease liability. Okay. But there are few exceptions which we discussed, low value items as well as short term leases. Okay. Now, right of use asset and lease liability. Now, I think these things you already know, so I'm just gonna be a little faster. So, what makes a right of use asset? What makes a right of use asset? So, what are the contents to be added in a right of use asset? Is first, how do you find the value of right of use asset? We saw in IAS 40 also, if initial recognition. So, this is basically initial recognition. Huh? Initial recognition, you have to initially recognize and right to use asset as well as a lease liability. Now, what are the elements that go into right to use asset? Okay, first you have to take the present value of lease liability or lease liability amount that you're accounting, which is this. Okay, this would be the, so we have to find the lease liability first. So first lease liability you find out, and then you add payments done before the commencement date. Okay, initial direct costs and estimate of cost. Okay, so initial direct cost to bring the asset to its present location and condition. So just like PPE, you do the present value of lease liability, the present value of future lease payments, which is what is lease liability, and whatever payments which is not included in the lease liability that is made before the commencement date, and initial cost to bring, and also you have to reduce discounts. Okay, this is what would be the total of a right to use asset. Is it clear? Is it clear? Okay, fantastic. It's not gonna take some time. So what would be the like lease liability? Lease liability, what all things you should add? You have to add, you have to find the present value. Okay, present value of the following cash flows. One is fixed lease payments. Let's say fixed lease payment for X years is going to be this present value of that. If there are variable lease payments, you have to also include that in the cash flows to find the present value. Okay, what do you mean by variable lease payments? This is there in UAE also. So let's say that my fixed rent is going to be 5,000 dirhams per month. But let's say the index goes very sharply high. Index is more than such a such limit. So you have to add extra of 25% will be added based on some other benchmark. It's just like LIBOR plus 2%, right? So some other benchmark will also be used for a variable. In such a case, if the rent is variable payment, then you have to use variable payments for the purpose of calculating present value and the lease liability. Okay. Now the amount of residual value guarantee. Now, what is residual value guarantee? Residual value guarantee, what do you mean by residual value guarantee? Residual value guarantee is sometimes what happens is, let's say that I bought a flat. Okay. So I bought a flat, and obviously I see that after the end of useful life. So let's say the useful life is 10 years. Still after 10 years, it would be worth something. Okay. I feel that. But what happens is if I give it on lease, if I use it, it would be worth something. But if I give it on lease, because the usage of the customer is very bad, the problem is after 10 years, after the useful life, the asset may not have much amount. Okay, so what I do as a tenant or as a customer, as a landlord, is I would say after while you are leaving, you have to give me guaranteed payment of this much. I will cut this from your security deposit because this would be usage charges or something. So that is what is called residual value guarantee. Okay, because I'm letting it to you and you will use this asset as a cow shed, I will not get residual value. I'll not get my guaranteed residual. So I'm guaranteeing my residual value. After you are lease term is over, you pay me this much. Okay, so this is what you call the residual value guarantee. Okay, and if there is a purchase option, so this would be there in finance leases. If there is a purchase option, the exercise price of that option, if the lessee is reasonably sure to exercise that option. Okay. So if the end of the lease term, if the lessee can purchase, then the present value of the exercise price, if that is reasonably sure that lessee will take it over. Okay. And fifth one, penalties for, so if there are any penalties for terminating the lease, and if I'm reasonably sure that the lessee would terminate, I would have to add that also. So this is the present value of all these is lease liability. I think you are already knowing all this. Like, there is nothing changed from your SPR days. But again, just brushing that up there. Okay. So you have to estimate all this right at the beginning of the lease, and you have to find the present value to find the lease liability. Is it clear? Any doubts? What is right to use asset and what is lease liability? Is it clear? Okay. Now,
Purchase option, do we have to deduct it?
we do not
I
have
mean,
to
that
deduct it,
excess,
we have to add it.
add it.
Yeah.
All the five, we have to add it on.
No, yeah, because these are payments which I will get. These are future payments that a lessor will get. If for a lessee, for a lessee point of view, these are the payments that I'll pay in the future, right? If there is a fixed
Okay.
lease, definitely I have to pay till the 10th year.
Okay.
If there is a variable one, I have to pay. If there's a residual guarantee, I have to pay. If I am intending to purchase, then I will take the purchase option also, because this is some amount I'll
Okay.
pay to avail the purchase option. And if I am terminating the lease in the midway, I will add penalties also. These are the payments I will pay towards the life of the lease, and I will find the present value so that I fix my liability.
Okay.
Okay. So this is going to be this. Now I have a fundamental question for you. What would be the useful life of this asset? What you see, I told you it is going to be a right of use asset. So what is going to be its useful life? I'll make things a little bit more clear. Okay. So let's say that um, 1 second. So let's say that I have the lease contract for 12 years. Hmm? Useful life of the asset is 15 years. Okay. And uh, I also say that after 8th year, I can discontinue the lease. Now, this is not my owned asset, correct? This is a leased asset. So, given that there are three numbers here, what would be the useful life of the asset for the purpose of depreciation? Lease term is 12 years, useful life of the asset is 15 years, and after 8th year, I can discontinue the lease. Yes. What would be the useful life? If there is purchase option and reasonably sure to repurchase, we can use 15 years. Okay. So this is not an asset, Melvin. This is not my asset. This is just my right of use asset. That means it's a lease element. Okay. So in that case, the standard also says what should be the, the useful life of the asset. What they say is it should be the non-cancelable period. It should be the non-cancelable period. What is the non-cancelable period in this example? Yeah. What is the non-cancelable period? It is 8. Okay, it is 8. Because I'm saying that after 8th year, even though the lease is for 12 years, after 8th year, I can discontinue. So it should be the cancellation period plus the lower of useful life, remaining useful life, or the remaining lease period if it is, reasonably sure that the lessee will continue. Okay. So it should only be for the cancelable period plus lower of remaining useful life. What is the remaining useful life in the asset? 8 years is gone. So remaining useful life is 7 years. Correct. So remaining useful life is 7 years, or the lower of remaining useful life or remaining lease period. What is the remaining lease period? 4 years. If reasonably sure that lessee will continue. So what would be the useful life of this asset for the purpose of depreciation? What would be the useful asset now? So 8 plus 12 years. Correct. Okay. So you can't go. So why it, see, Melvin asked a question that, useful life of the asset is 15. Why can't I take 15? No, because this is not your owned asset, Baba. This is an embodiment of lease transaction. Okay. Right of use asset does not mean you own the asset. If you own the asset, you can take 15 years. But you only own a right to use the asset. Okay. That right to use will expire in 12 years. Even if the useful life is 15 years. Are you getting my point? Yes or no? Okay, so that is why there is a little distortion in the useful life calculation. So let's do one question. Oh, sorry. So this is the initial recognition. Okay, you will recognize a lease liability and a right of use asset. Okay. Now, how is the subsequent recognition? Are you clear about the initial recognition of an IFRS 16 for lessee? Any doubts here? Okay. So subsequent recognition, what do you do? Let's take ROU asset. This ROU asset, if it is a PPE, then I can do either cost or realization. Cost or realization method. Now, I will not explain what is meant by each. It is very clear. For if you are taking cost method, then you have to depreciate, even realization method for that matter. For depreciation, how much years would be used? You will use 12 years. Okay? Or 8 years, as the case may be, based on the situation. Now, if it is if it is an investment property, IAS 40, we will use what? We will use fair value. Okay. So this is going to be the subsequent recognition of the ROU asset. So we will show depreciation and subsequent recognition of the lease liability is going to be, we will deduct fixed lease payments and add interest cost. Okay. So you will get that. Let's do one question so that it's very clear to you. We'll do a very small question. Do we have time for that? It's only 10:30. Can we do a question so that we are clear on application of theory? Or you guys are hell bent on the return season? Yes or no? Question or not to question? Is this yes for doing a question? Can you tell me one more time? Because I see a lot of S's and O's. Okay. Okay, no problem. So Sahil says let's do tomorrow. So tomorrow we will do the accounting. Okay, we will do the accounting as well as plus sale and lease back plus lessor accounting. Okay, so understand that what will take time is understanding whether it is a lease or not, because that was the most difficult thing to understand for me as a student. But these things, we will understand, and I've already put the questions also, so we will kind of like do this. So we'll continue tomorrow. So all the best. And if there is anything that you need to discuss from IFRS point of view, or you're not liking the way in which I'm explaining things, or you want me to improve in such a way, please be my guest. Tell me how I should do that so that we can serve each other better. And of course, all the best for the remainder of the tax season. And we will see you tomorrow sharp at 9. See, tomorrow it will be a little bit more because I thought I will complete lessee accounting and one example today, so that it's going to be correct for tomorrow. There would be two things. So tomorrow we may need to extend. So come with a mindset that we may need to extend 11:30. Okay. Otherwise, we may have to ridicule your Saturdays. Chalo. Then let's leave then. I will see you guys tomorrow. Thank you, guys.